Let's also welcome in our guest for the afternoon on the technical side, Sacchitanand Uttekar, the AVP for Technical Equity at Tradebulls. Sachit, how are you reading the market action after 3 down days? We had that moment where we fell below 10,000 in today's trade as well, but a recovery has been made. So clearly, the market has strength in it. It's not going down in a big way, and now back above 10,050.
Well, absolutely. After 2 days of a strong decline, we are seeing some relief ahead of the weekend. But if you look at the overall way, the way in which we saw these 2 days of decline, it was largely contributed because of the banking names. And this is where we are sensing some pressure. In fact, if you look at the overall stance that we have been advocating now is that every rally should be utilized to book profits. And we are sensing a correction, a much awaited correction in the market to pan out in this particular expiry. In fact, if you look at the entire series, historically, August has been one of the stronger series wherein there have been bigger drags witnessed in the market, and this is what we are expecting, to be witnessed in this particular expiry as well. So we are not really optimistic on the market as of now. We are expecting a correction and a correction right up to 9,800 in the coming week or so.
So you're saying, Sachit, that if there is a bit of a risk appetite, maybe it's the right time to go short?
Well, absolutely. I think the bounce back that we are seeing right now has been a good one. In fact, keeping stop losses right close to say 10,150 or so, one can look at this particular opportunity as a shorting opportunity where we can create some fresh shorts with an expectation of a move right up to 9,800.
Right. Let's talk about the top gainer on the street right now, and that's an IOC. It's contributing about 5 points to the Nifty up move. So second biggest contributive stock on the Nifty this afternoon, and you have a 5% jump coming in on that counter. There were strong earnings coming in from this one. Piyush was analyzing the OMCs for us a while back, and he's saying that IOC is just catching up to its other OMC peers. You had Morgan Stanley that's come out with a positive new view on this one, overweight rating, target of 533. So they see significant upside from these levels. Core EBITDA above estimates, earnings are 7% above estimates, core refining margin 15% above estimate, discounts on sweet crude product upgrades have led to outperformance. See 10% upside to consensus estimates on the stock due to the product mix as well as favorable crude sourcing. Marketing margins are starting to normalize to pre-demonetization levels. Expect market margins to inch up as retail margin creeps up. And the margin increase highlights upside for both IOC as well as HPCL and BPCL. So that's some of the factors that are working in for an IOC right now. Remember, Singapore GRMs have been going up as well. Piyush was estimating them to be at around $8 per barrel for the month of July. So that also is going to aid sentiment on OMCs, especially an IOC right now. Here are what the management had to tell us as far as their outlook going forward is concerned.
July normally being a monsoon month, typically we see a little decline in the diesel demand also. But nevertheless, the margins are good for the diesel, and the refineries are doing fairly well. We have, of course, it's part of the normal operation for the refineries. I mean, a couple of refineries had planned their shutdowns because being a low demand period, we take a couple of units shut down, which are typically diesel producing units, so which will be done. But as far as the whole quarter is concerned, we expect a similar performance during the next quarter also. If we look at the whole year, I mean, our capex is around 20,000 crores we have planned for the whole year. And typically, I mean, depending upon the different kind of projects, it varies from quarter to quarter. And I think we are fairly on track as far as the capex investment is concerned. Ramping up is over because the refinery is operating at 100% throughput now. Not only now, it is operating for a couple of months. There is no major issue in the refinery, and it's doing extremely well. Petchem business for us is doing well. In fact, the naphtha cracker during the last first quarter performance, I mean, in terms of capacity utilization was extremely good. We achieved nearly 135% of design capacity. Definitely, I mean, these are all opportunities which are present for all of us, and there is a lot of advantage in terms of vertical integration, and of course there is a possibility of horizontal integration also. We are a decent player in upstream, we are a good player in midstream, and we are a strong player in downstream.
All right, that's as far as IOC management is concerned. Sachit, IOC, what would you do with this one? 5% upside coming in. OMCs have been in hot form this week. Would you venture fresh longs right now?
Well, the momentum has been really strong. In fact, if you look at the overall down move that we saw from 445 levels right up to 370, in the previous week we saw this particular stock getting stable somewhere close to 365, 370 zone, where the 200-day exponential moving average of this particular stock is placed. And from that instance itself, we have seen a strong up move. Definitely, the momentum has been very strong, and I think the reward to risk may not be suitable right now. But on a decline somewhere close to 390, again, one can look at this particular counter. In fact, OMCs is one particular space wherein we are really comfortable, talking about a continuation of the trend. And if you look at a stock like HPCL, I think this is one particular stock that we discussed earlier as well. It has come out of a consolidation of almost 4 months, and there are fresh patterns which are indicating that the uptrend could be sustained. So on a contrary basis, one can look at OMCs again. We may see some kind of outperformance continue in this particular space. Even if the market corrects substantially, we may not see any bigger drags as far as OMC space is concerned. And our top pick would be HPCL.
Top pick would be HPCL, right. We are also going to get you the management of Dabur, in fact, just about a minute from now. But have you looked at mid-cap consumption names recently? Sachit, you had a good up move come in for the likes of a Colgate, a Marico and an Imami in yesterday's trading session. Dabur today also posted its numbers. Any stock, any view on these names?
Well, I think of the lot, it's better to stick to the large caps. In fact, if you look at HUL per se, it has been consolidating for the last 15 days. It has really not come out of that particular consolidation. But from a trading play, in case if we see a breakout above 1190, we may see trading momentum right up to say 1230, 1235 levels. And this is one particular opportunity that can be utilized. But so far as Marico and Dabur is concerned, we are not seeing any fresh fresh patterns or fresh indications.
Right, Sachit, apologies for cutting in. The management of Dabur is just joining us, so let me go across and hear what they have to say, and then I'll come back to you. Lalit Malik, the CFO at Dabur, on the show with us. Afternoon, Mr. Malik. Thanks for speaking to us. What has been the reason for the decline in volumes this time around? We were expecting a GST impact, but from your perspective, what's led to this fall of 4.4%?
Sure. I think first of all, what we have seen is in the India FMCG sector, there is a volume decline of 4.4% and the value is around 5%. Overall, of course, on the consolidation side, it is decline of 8%. The prime reason in the Q1 for India top line decline is on account of GST or pre-GST implication. Before GST implication, April and May has seen very good growth. In the month of July, on account of destocking, we have seen the pressure on the top line, and as a result of it, we have seen decline in the first quarter of top line. So that has been the impact as far as India is concerned. As far as international is concerned, there is a steep impact on exchange for primarily 3 countries, which is Egypt, Turkey and Nigeria, where the currencies have devalued approximately 49 to 50%. We have seen huge translation loss on the top line, and there have been some disturbance in Saudi Arabia and Qatar. So overall, if considering that, we have India decline of around 5% and consolidated is around 8.4%.
Can you also talk to us about this 14.5 crore rupee provision that you've made? What's this all about?
Sure. Considering the GST rates, there have been some category of our products where the GST rates have increased compared to the current rate of taxes, and considering that in mind, keeping the MRP same, distributor will have impact on their margin, and as a good partner, we have agreed to compensate the distributors on account of inventory, the transit inventory that they are holding on 1st of July. In case if they have a loss, we have agreed to compensate them as our business partners, and this provision is an exceptional provision, one time on the transit inventory, that we have provided in our Q1 results.
Right. Talking about GST and the disruption that it has caused, do you believe that it will continue and it will reflect in your Q2 numbers as well, or are we done for now?
See, as far as our readiness and implementation is concerned, we are completely on top of GST. There has been some time being taken by the general trade in order for it to come back to normal. So certainly we will see some impact in Q2, and we hope that it will start gradually becoming better as we move ahead in Q2. What we do expect is that in H2, starting from Q3, things will come to normalcy, but at the current level, there will be a gradual progress that we will see in Q2, but certainly the month of July has been slower with regard to its recovery, and it's coming back to normalcy, and we hope that by end of Q2 or beginning Q3, it will be in a position to come back to normalcy.
Talking about your international business, of course, how has that done in this quarter, and what's the outlook going forward?
Sure. As I said earlier, as far as international markets are concerned, on the local country level, they have been growing at a steady pace. However, in view of exchange, in consolidation, we have seen exchange loss of approximately 83 to 84 crores on the top line and around 10.5 crores on the bottom line. So the exchange has been pulling down the top line and the bottom line on the consolidation, but the local country level, they have been growing at a steady pace. In addition to that, there has been some disruption on geographical disturbance in Saudi Arabia and Qatar, which has some impact, but subject to that, I think our business international is growing at a steady pace, and we do expect that next couple of quarters, even the exchange impact may come out of it, and maybe from Q4 onwards, we will start getting neutralized unless there is another blip on the exchange.
Then talking about your growth trends going forward, what will be the key drivers, both on a segmental as well as product basis?
Well, I think if we just look at it, as I said, we do expect Q2 to come back at a gradual level, and we see the growth coming back from Q3 onwards, hoping that the monsoon will also be good and inflation be under control. We do expect the demand to start getting revived, and also on account of festival season starting from October, we do expect the growth to come back from Q3, and H2 we do expect to be better than H1.
Fair point. So then before we let you go, just give us an outlook on FY18 basis, both in terms of revenue growth as well as the EPS number that you're looking at.
Well, I think it's too early for us to talk about the year at this stage. We have to wait and watch with regard to the normalcy coming on account of GST and how the demand will come back. So it's a little early for us to talk about the annual numbers. But what we can certainly say is that there has been a decline in Q1, and we do see the slowdown in Q2. But H2, which is Q3 and Q4, we do expect to come back with the steady growth. So overall scenario will pan out as we progress in the remaining quarters. So that's what we can talk about, but not exact numbers at this stage.
Fair point, Mr. Lalit Malik. We'll leave it at that. Thank you for joining in and sharing the outlook on Dabur and the performance going forward for the company. Up about 0.6% right now. Volumes have shrunk by about 4.4% for the quarter, but the management is saying this is GST impact. The outlook should only improve going forward from here. Let's take a very short break. Lots more to talk to on the other side. Sacchitanand, of course, will be with us. We'll also welcome in Ajay Bagga, look at some of the other market moving stocks as well. Welcome back. You're tuned into the trading day, looking at the market movement right now. Giving up some gains again from the highs of the day. So we were up about 0.5% at one point. We've retraced that, but down at about 10,040 on the Nifty. Nonetheless, a reversal coming in from where we were stuck in for most of the day today. M&M Finance, look at this one, 7.5% up move coming in over here. Sachit, what's going on this one? It's up 7.5% in today's trading session. What would you do with a stock like this?
Well, definitely, if you look at the trend, it has been very strong. Consistently, we have seen a series of higher tops and higher bottoms, and in fact, whenever there is a resistance being faced, that particular resistance is taken out with good volumes. So, definitely, the trend and the structure remains very strong. We are expecting this particular move to continue right up to say 450, 440, 455 kind of a zone, and a trail stop strategy is something that can be deployed even right now. So, even if one tries to play momentum, I think stop can be placed somewhere close to 410, and positions can be held for a target right up to 455.
Right, watch out for a target of 455 on this. Incidentally, we were talking about OMCs, just pull up an HPCL as well. We will see the strong spike that's suddenly come in on the counter, and it's shot up to about 6.5% on an HPCL right now. So that too is seeing, in fact, 7.5% right now. So just about another 1% of gain added in the last 10 seconds alone on that counter. Extremely strong trend emerging on an HPCL as we speak. This is the earnings boost that is coming in. We're talking to Piyush about this a little earlier. Sachit, I know we've spoken about IOC. That too has gone up by about 7% right now, but also give us a view on an HPCL. Where do you see this stock heading next?
Well, as I said, we are very optimistic on this particular counter, and we expect the stock to rally right up to say 470, 475 kind of a zone. If you look at the overall, trend structure, the stock has been in a secular uptrend. For the last 4 months, we saw a good consolidation, and this particular consolidation was breached a couple of weeks back. And the overall sense that we are getting is that this particular space could be an outperforming space, and especially within the space, I think HPSCL has a very good or a very strong trend structure. So we expect this particular rally to continue right up to 475. I think even at this point of time, there is a very good opportunity. Longs can still be added for a target right up to 475.
Okay. All right, just hold on to your thoughts over there, Sachit, because we have breaking news for you right now, and this is an exclusive that BTVI is picking up. Cement companies are back under the CCI scanner, and this time the Commission of India is probing price hikes undertaken in the northeast part of the country. Chetan Bhutani gets us the exclusive details. He joins us from our Delhi studios. Chetan, what have you picked up? They are back under CCI radar yet again.
Well, that's right. Cement companies are back again under CCI radar. What we are given to understand from our government sources is the fact that the Competition Commission of India is now probing on a complaint filed by the Assam Real Estate and Infrastructure Developers Association and the Assam government. They both have filed a complaint against cement companies for cartelization. So what these two entities, the AREDA, which is the Assam Real Estate and Infrastructure Development Association, and also the Assam government, are saying that the cement companies are fixing prices. They are indulging in cartelization for real estate and infrastructure projects. What we are also given to understand that Dalmia Cement, Star Cement, which both are listed companies, are under scanner for this under Competition Commission of India. We also understand that Dalmia Cement is also under scanner, though they don't specifically provide cement to the northeastern sectors, but we are given to understand that Dalmia Cement is also under the list. Cement companies are coordinating and fixing prices behind the back, says the Assam regulation and estate regulators. And also a sharp hike in cement prices have been seen in the past few quarters. We at BTVI did a research on how much amount the cement prices are hovering around. We are given to understand. We also spoke to some dealers in the northeast. We are given to understand that cement prices are ruling in the northeast to the range of about 350 to 375 rupees about for a 50 kg bag. So CCI is also investigating an unjustified hike in cement prices across the northeastern sector, especially in the state of Assam. Assam is particularly the major hub for infrastructure and for the real estate. It's an upcoming state in the northeast sector, though it's dealing with floods. But on the overall, we are given to understand that CCI is investigating the matter. We are expecting that in the next about 6 to 8 months, an order that could be bad news coming in for the cement companies would be placed soon. But for the time being, we understand that cement companies are under CCI radar. Again, CCI has been investigating a lot of cement companies before. They have issued huge penalties also, but now they are again under CCI radar. But we'll get back to you when the order comes out.
Thanks for that, Chetan. That's the exclusive story we're getting to you. CCI is going to probe price hikes in the northeast part of the country. Meanwhile, Anand Mahindra, he is speaking at the annual general meeting of Mahindra & Mahindra Group. Let's cut across to that.
From his financial acumen, particularly through his membership and through the chairmanship of the Audit Committee, his sagacity and his wise counsel, and therefore we owe him our deepest gratitude. Mr. Parekh, as you know, is an iconic Indian leader, and he's well known for the conviction of his views. His contributions to the financial sector in India, and indeed to the entire industrial and business sector of India, are well known. And frankly, he's the go-to man for policymakers and for the government. He's been on almost all key panels for financial sector reforms. But much more important, he has made integrity not only a cornerstone of how the HDFC Group is run, but he also embodies that spirit in his dealings with others in the world of business and politics. Quite apart from this, I want to personally thank you, Deepak, for your guidance and your mentorship to me, the advice you've given me personally throughout my journey at Mahindra. So formally, just one second, I would like to place on record the board's appreciation of Mr. Parekh's contribution. And of course, on behalf of us, wish him the very best. But may I ask the rest of the board here to join me in giving him a standing ovation. During the year, your company inducted Mr. T.N. Manoharan on the board as the new independent...
So Anand Mahindra speaking at the 71st AGM of the Mahindra Group. He was just thanking Deepak Parekh over there for his role as a board member at the Mahindra Group. We'll, of course, get you more relevant details once he starts speaking about that. HPCL, the press conference for that one is also about to start right now. And remember, the stock is on fire. 7.5% gain coming in just as we speak. So we're watching out to that as well. MRF came out with its numbers just a short while back, and it's been a weak quarter for them, in line with the trend that we saw for a CET earlier yesterday as well. So MRF profit is down about 78%, coming in at 106 crores versus 491 crores. But HPCL management is talking. Let's cut across to that.
925 crores during period April to June 2017. Revenue for the quarter was 59,891 crores compared to 51,600 crore for the same quarter last year. Gross refinery margin for the quarter is $5.86 per barrel compared to $6.83 per barrel during the corresponding quarter of the previous year. The core GRM is $8.81 if we do not account for the inventory gains or loss for this quarter. During the period, the combined throughput of the refineries is 4.49 million metric ton, which is 114% capacity utilization against of throughput of 4.48 million metric ton for the same quarter last year. Both the refineries are producing BS4 fuels effective 1st of April 2017. The domestic market sale was 9.2 million metric ton, which is the highest sales in any quarter by the company. This represents an increase of 3.5% over the first quarter sales of the last year. This market sales growth of 3.5% is higher than the industry growth of 3.4%. In the BSE category, we have gained a market share of 0.2%. MS is increased by 9%, high-speed diesel by 2.5%, LPG by 10.7%, and ATF by 25.5%. The bitumen...
Just as a background, last year in the year 2016-17, our revised disinvestment target was rupees 45,500 crores. We were able to realize rupees 46,247 crores. This comprised of both CPSE disinvestment as also a strategic disinvestment and income from the management of the SUTI investments. This year we have a fairly stiff target of rupees 72,500 crores, of which disinvestment is 46,500, strategic disinvestment is 15,000, and others, which is primarily the listing of the public sector insurance companies, is 11,000 crores. So far we've been able to realize rupees 9,300
I think so, and I have been consistently a votary for investing in the OMCs. We have seen even in the private sector the benefits coming through. And yesterday the news flow was that some European refining capacity is going off for a prolonged period. So a lot of the Asian refiners will benefit, and we saw the Singapore GRMs going up as a result. So our OMCs will also be a beneficiary overall, and market is fast discounting it. But even on a longer term basis, leave aside today's price action, I would say they remain a pretty good bet for long-term compounding of returns. So these can be owned.
The finance minister, of course, was talking about the ETF and how some public sector banks would be a part of that. But just pull up the components of the Nifty PSU Bank Index for you right now. All of them in positive territory. The index in itself is up about 1.5%, one of the best sectoral movers right now. And Nifty PSE, that's the entire basket of Nifty PSU stocks, that index has shot up by about 3.5%. So PSU stocks are on fire this afternoon. But talking about PSU banks, Bank of India up about 2.5%. Andhra Bank shot up to about 4% on the back of earnings. It's down a little, but still up about 2%. SBI, PNB, Canara Bank, Union Bank, IDBI, OBC, Bank of Baroda, all of them are doing well. And Ajay, this is something that intrigues me because banking stocks have been on fire, private and PSU banks. PSU banks especially have continue to do well. But if you look at earnings across the board for PSU banks, where is that positive momentum coming? Where is that cheer coming in that, you take a long-term bet? Look at UCO Bank. It's under PCA. Provisions have gone up. Gross NPAs have gone up. Look at IDBI. Look at Central Bank. Look at Bank of India. All of them are under trouble right now. Where is the cheer coming from if you're going to bet on PSU banks? And they continue to go up. The PSU bank index is up, 21% on a YTD basis?
Yeah, I think it's the liquidity. You've hit the nail on the head. There is no fundamental that can justify investment in the public sector banks at this point in time. The government needs to bring in huge amounts of capital, and there is no clear indication of how that will happen. There's no money in the government's coffers to allocate 1 lakh or 1.5 lakh crores. There's a 7 lakh crore NPA which is sitting largely on the public sector banks, and look at some of them are running at 13%, 15%, some have even crossed 20% of gross NPAs. And remember, this is still under the old accounting treatment. If you move it to India GAAP, there's a much worse situation. In fact, we had some Indian banks which are listed on the US as ADRs, and there if you look at the US GAAP, it makes for a horrendous reading. So overall, it's totally unhinged from fundamentals. I would say watch out. Government has to raise money. They will engineer a lot of these kind of moves, but there is no fundamental backing it. It's more liquidity and price management that's happening to make sure that these prices stay afloat and they can be unloaded to investors. So let the smart money, the strategic investors, those come in and take bets. I would say when you have opportunities to buy private sector retail focused banks and NBFCs, housing finance companies, well run, very transparent, with huge growth, forecasts, then go with them. Why do you want to come and take a chance on a turnaround? May happen, may not happen. God knows how it pans out over the next 2 years. I would say stay away from public sector banks.
Stay away from public sector banks. But Sachit, talking about housing finance, I'm looking at a PNB housing finance right now. Of course, this is an earnings reaction coming in, but it's a 7% up move on the counter. Repco Home Finance has been active all day today. Ujjivan Finance, it's an MFI, but was down at one point in time on back of weak earnings. That has shot up quite smartly and is up about 4% in trade right now. On the charts, what would you do with these three names? M&M Finance, Repco and Ujjivan.
I think M&M we already discussed. The way the overall trend structure is maintained, we expect this particular run to continue. Especially if you look at a stock like Ujjivan, the stock did witness some pressure post its earnings. But if you look at the monthly scale, I think 280, 290 has been a decent support for this particular counter, and I think today we have just seen a reaction from this particular support itself. So I think from a reward to risk perspective, I think it's a very good entry level. One can look at this particular space from a longer term perspective. If you look at the longer term charts, especially last couple of years, the stock has been oscillating within a band of around 440 on the higher side and 280, 290 on the lower side. So yes, we are placed at the lower end of the band, and I think this is a very good opportunity wherein one can take some bets from a longer term perspective as far as Ujjivan is concerned.
I was looking at some PSU stocks. We still don't have the list of the stocks that will be added in this ETF, but the Nifty PSE index is up 3.3% in trade right now. Apart from OMCs, which are on fire right now, you have Nalco up 4%, NMDC 3.5%, Coal India 3%, NTPC, GAIL, SAIL, Power Finance, NHPC, Power Grid, all of them seeing some gains right now. Also pull up BEML and BEL. These stocks have been under the radar because you're talking about government divestment coming in at some point over there. BEL is not reacting right now, but BEML has shot up. Shipping Corporation of India, SCI, that too has shot up in trade right now. So keep all of these stocks on your radar as we await the list of stocks that will be included in that Bharat 22 ETF. But Ajay, I want to understand from you, what have you made of the trends that came in from the auto sales in the past few days? Of course, part of it could also be attributed to GST and inventory restocking. Retail sales, and this is what we've picked up from both Dealers Association as well as analysts who track the auto sales, haven't been that good in the month of July, and it's not expected to be like that in month of at least August and September either. So is there a case that at least for this quarter, both on the sales front and the volume front, autos may come under pressure, even though the month of July and Q1 has been good for them?
Yeah, July numbers is difficult because, it might be the June destocking, as you were also mentioning. So very tough to make a call from that. I would stick with the leaders, be it two-wheelers, be it passenger vehicles. I think CVs, still the jury is out. CV, maybe 6 more months before you can get a clear trend. That's not looking too good. Today, the tire companies have really disappointed. And part of the management commentary, what they're mentioning is that the OEM demand in the CV segment has been low, and the replacement demand went totally south based on GST. That's had an impact on their numbers. So we have to still study. Mostly numbers are very fresh today. We've not had time to go through, but all I would say is auto remains a very strong sector, well-run companies with a huge return on equity, and it's feeding into the domestic consumption theme. So any dip should be used to acquire more auto companies. Again, I am re-emphasizing, stick with the market leaders. They are the ones who will give you growth. Turnaround stories, still time. The ones who are losing market share, I think those can be avoided. Stick with the market leaders across two-wheelers and passenger vehicles. Tractors is again a very strong turnaround story. Tractors are looking good, and with the amount of rural focus, be it the pay commission money going in or the farm loan waiver benefits, second order benefits coming in, that's going to have a further impact on tractors. So 3 out of 4 looking good. CV still not looking good. That can be avoided.
Avoid CV and stay with the market leaders wherever you're betting in the auto space. I have some names for you as far as the stocks that will be part of the new ETF. So the finance minister is stating that the government will divest stake in ONGC, IOC, Coal India, SBI, Axis Bank, Bank of Baroda and ITC via the new ETF. So that's the first list of stocks that we can put out for you. ONGC, IOC, Coal India, SBI, Axis Bank, Bank of Baroda and ITC. via the new ETF, and possibly part of the up move in IOC could also be on back of this move. But that's the picture for you. Sachit, talking about tire stocks, now help us put this in trend as far as where the tire stocks are heading in the short term. You've had CEAT and MRF that are taking it on the chin on the back of weak earnings. But this space has been on fire for a while now. It was running up in anticipation of anti-dumping duty coming in, and that's already happened. But on the charts now going forward, how do you see tire stocks shaping up? Any favorites that you have in this space?
Well, yes, post the news, I think the correction has really set in. In fact, the numbers have really not been with the street expectation, and this is why the corrective move is being witnessed. But if you look at the entire pack, I think our favorite still remains something like an Apollo Tyre, where we have seen that the stock has breached from a rounding formation on the longer term scale. This particular breakout has happened somewhere close to 235, 230 levels, and which is indicating a target right up to 300, 330. So it is not a short term view. Definitely, the pattern has been of around 2.5 years, and we may see this particular target getting achieved in next in couple of quarters itself. So yes, I think it's a very good opportunity in case if we get a decline closer to 255, 250 is a decent level or a zone wherein one can again look at this particular counter. So overall, yes, we are seeing some corrective within the space, and Apollo Tyre remains our top pick, and I think a decline should be utilized to create some long positions, keeping a stop loss somewhere close to 220.
Right. Ajay, would like to thank you for joining in and sharing your call on the market today. Appreciate you joining us as always. Sachin, just hang on for a minute. I'll get back to you after market closing and take a final closing comment. But getting into closing today, it's been a quiet week on a weekly basis for the markets. But nonetheless, today's session was action-packed, and you've seen a smart recovery come in from the lows of the day after 2 days of a downfall, closing out near the highs of the day on the Nifty, back above 10,050, closing in at about 10,070 in trade right now. OMCs have been the flavor of trade today. So IOC closing out with gains of 8%, HPCL closing out with gains of 10%, BPCL also seeing gains near about 6% at close of trade today. Tata Steel was up 3.5%, 4%. Eicher Motors was strong all day today, as was Coal India. Vedanta was up 3%, and this was something that was identified in early trade today as well. Hero Moto up about 2.5%. GAIL did well, so did NTPC, Hindalco, Cipla, HUL, SBI and Ambuja Cement. Bank Nifty up about 0.6% at close. SBI, Yes Bank, IndusInd Bank, PNB, Canara and Federal Bank were some of the top gainers over there. You also had good gains coming in for the likes of an Ambuja Cement and HCL Technology and TCS, Bajaj Auto as well as an Asian Paints. Only a handful of losers on the street though, and Pharma yet again not participating in today's market up move. Dr. Reddy is down about 3.5% at close. Tata Power was down about 3%. Aurobindo Pharma down about 2.2%. Sun Pharma down about 1.6%. Bosch was down 1.5%. RIL not participating today, down about 1.4%. Lupin, ITC, Ultratech were also some of the weak counters. Looking at the broader market universe, you had strong gains come in for some of the NBFCs. The likes of an M&M Finance was up 7.5% at close. Repco Home Finance, PNB Housing, all of these did well. You had Unitech that ran up by about 10%, was quite active in the future space as well. Titan reacting to its earnings, strong sales in the jewelry segment, up about 9.5% at close. Info Edge saw gains of about 8%. Minda Corp, VIP Industries, GSK Pharma, Jet Airways, Ujjivan Financial turning tide and closing out with gains. GVK Power, SCI, Century and TTK Prestige were some of the other gainers that you've had over there. Tire stocks were weak in trade today. CEAT reacting negatively to its earnings was down about almost 9% at close of trade. Apollo Tyres, MRF, TVS Sri Chakra, Balkrishna Industries, JK Tyres, all of them saw some kind of a cut in today's trading session. So that was one space that didn't really participate in the up move on the markets. But PSU stocks were on fire. PSU Bank was on fire. Looking at the weekly movement as well, you had the markets that ran up, that didn't really go up as far as the weekly movement goes, but within that, auto index was up about 1.9%, consumer durables are 6.7%. Metals up 3%, oil and gas up 4.5%, a bulk of that up move coming in the last 2-3 trading sessions. Healthcare was down about 4%, telecom was down about 0.2%. So that's the market snapshot for you as we head into the weekend. Sachit, you're talking about 9,800 on the Nifty in just the next week itself. But if I were to ask you for a slightly longer term view on the markets going forward, in the August series at least, where do you see the Nifty and the Bank Nifty heading?
Well, as I said, we are looking at a seasonality factor getting repeated. If you look at the 10 years of history, August has been one of the series wherein the markets have witnessed major drags. So if you look at the run that we saw in the July series, right from 9450 till 10,100, we really did not see any meaningful correction. So I think this particular time is very much ripe, and we won't be surprised if we see the markets coming down towards 9,800. But when you look at the overall trend, from a broader perspective, I think this could be termed as a decent correction, a much awaited correction, and this particular correction could be bought in. But we are not really optimistic, at this level. We are expecting the markets to drag, and probably somewhere in the end of August, early September, we may see these levels coming in. So I think one should wait out for this particular correction to pan out, and again look at the market from a longer term perspective.
Fair point, Sachit. We'll leave it at that. Thank you so much for joining in today and sharing your call on the market. So that's the market for you. Not doing much on a weekly basis, but you had a smart recovery come in today, closing up higher by about 0.5% on the Nifty. Watch out for some key movers and shakers going forward into next week as well. You have Tata Steel that comes out with its earnings next week. Ahead of that, that stock was up about 4%. OMCs and oil and gas space in particular has been fire all day long. As